Today, I'm going to be talking about tax credits and I'm going to be talking about tax liability. These are two extremely important topics here in 2023 and forward. I'm going to break down everything for you. I'm going to make this as simple as possible. This is not going to be lawyer speak. However, I do have the bill pulled up and we're going to be referencing that. So I can show you along the way exactly where in the bill it says what it is I'm sharing with you. Now, there is a ton of misinformation out there, and it is such a complex situation. It's understandable that people don't quite understand what is happening. So if you're one of those people that say, I only get a $1,000 refund at the end of the year, I'm not going to qualify for the $7,500, so what's the point? You're very wrong in your justification on what you're thinking a tax refund versus a tax liability is. Getting a tax refund just means you overpaid on your taxes. That has nothing to do with your actual tax liability. As you know at this point, the EV tax credits are non-refundable, meaning you have to have enough tax liability to capture the full amount that the vehicle you're purchasing is qualified for. There are other qualifications like income, but we're not going to go into those details today. Today, we are focused on what this bill does and what your tax liability is. You should be able to walk away from this video knowing exactly what your tax liability was for 2022 and using that as a basis for determining potentially what you should expect for 2023. Of course, there are going to be some changes year over year in your personal situation that could impact those, but it'll give you a basic guideline of what you should expect your tax liability to be in the next year. In addition, I have two really good friends, John and Jim Doe. They have provided me their 1040s for 2022, which is very convenient because I'm going to use their 1040s to go line by line to show you exactly how to find out what your tax liability is. And we're going to assume you bought a vehicle that qualifies for the $7,500, and each of their incomes is going to be used to determine how much of that tax credit you're going to be able to get. So make sure you stick around to the end. There's going to be a ton of really good information. And I promise you, I have read this bill more than anybody I know. I know I've read it more than anybody in Congress. In addition, I have looked at how this impacts your taxes quite a bit over the last couple of years. And I've also done some research with CPAs directly, both recently and throughout the last 2 years. So shout out to them for providing some really good information, and making sure I'm not spreading misinformation, which is the most important part of this. It might be worth sharing this video. I'm going to again provide the best information that you can get on these tax credits and your tax liability in today's video. You will also notice in the description there are going to be a number of links, and these links are going to be to different places where you can find this information on your own if you want to dig a little bit deeper. But first and foremost is fueleconomy.gov, and this is where you're going to go to find out how much of the tax credit your vehicle that you're considering is going to qualify for. So essentially it's broken down into two. You can get $3,750 for one piece and $3,750 for the other. Critical minerals and battery components. You'll be able to see very clearly how much of that tax credit they are certified to be qualified for. So this is a great place to start. If you're considering an ID4 as an example, you're going to go through this website and it'll show you exactly how much of that tax credit the vehicle itself qualifies for. The only thing that's left is figuring out what you personally qualify for. The vehicle itself, it has a qualification level, and that is it. Everything else is dependent on you, the consumer, on how much income you make and how much tax liability you have. The first thing that we're going to do is we're going to dive into this bill, and we're going to look at some very specific pieces that I see brought up the most. Right now, how this works here in 2023, you are going to purchase a qualified vehicle. Assuming you qualify as well, you will find out at time of filing your 2023 taxes, which are due in April of 2024. That is when you're going to realize these tax credits on the vehicle. This is for the first year only. It's very simple. At the end of the year, file your taxes. You'll put the vehicle information in there, and you will find out if you're going to get all or some of that credit that the vehicle may qualify for. Starting January 1st of 2024, this is where things get a little bit complicated and a little bit more vague, but let's dive into as much of the detail as we can. Starting in 2024, you can actually transfer your credit to the dealer that you're purchasing the vehicle from. And here in section 1, it spells that out very clearly. You're allowed to pass on that credit to an eligible entity. And what that's going to do is, if we look down on section 2C, at the time of purchase, you will be able to use that tax credit right then right there to apply it towards your purchase. So if you're buying a $35,000 vehicle, you're going to be able to leave that dealer paying $27,500 should the vehicle qualify and you qualify. There's a couple of follow-up questions here. How many credits am I allowed to have? Well, let's take a look at section F. You can receive 1 credit per vehicle. You can claim a tax credit for every qualified vehicle that you purchase. There is no timeline, there is no gap here, but remember, there are income limits, which means you can only make so much, which means your tax liability can only be so much. So you could probably, in some cases, buy a couple of electric cars per year and offset all of your taxes. But if you tried to buy 10, you're not going to get $75,000 in tax relief because your income would be way too much to be able to realize a non-refundable tax credit of $75,000. So that's how this works out. They don't care how many you purchase. Every vehicle that qualifies is qualified for the full $7,500. It's all a matter of your tax liability. Now, when it comes to used vehicles, if we look down here in the used vehicles section, what we find is this is based on every 3-year period, and that starts the day you purchase the used vehicle. Of course, it's got to meet certain qualifications and the income requirements are different here, but every 3 years you can purchase a used vehicle and get that up to $4,000 on a used vehicle. Until the Secretary comes back and defines this part of it, we really don't have a great understanding exactly how this is going to work, but we do have a pretty good understanding of what the intent is here. When you go to purchase this vehicle, if you apply $7,500 to that vehicle and you don't have $7,500 in tax liability, the IRS will be taking that money back. And this is where it's going to get a little bit complicated until the Secretary defines how this process is going to work, how you're going to determine how much of that credit to apply at time of purchase. Here is where they have identified recapture. And basically what this says here at the end, the tax imposed on such taxpayer under this chapter for the taxable year in which the vehicle was placed in service shall be increased by the amount of the payments received by the taxpayer. So if you only ended up having $5,000 in tax liability, but you took $7,500, when you file your taxes at the end of that year, you are going to owe the IRS $2,500. It says nothing about penalties, it says nothing about interest, but there is a possibility that there will be interest and fees involved. And then for used vehicles, as we can see, it will have rules similar to the rules of Section 30DG, which is what we just talked about. So used vehicles will also have that recapture. If you purchase a used vehicle, you take $4,000 in credits, but you only have $1,000 in tax liability, you're gonna owe that $3,000 difference back to the IRS at time of filing your taxes. All this talk about tax liability, and this is where there is so much confusion and, quite frankly, a lot of misinformation that's being spread. Let's clarify this and really define what is tax liability and how is that different from your tax refund. Here is how it works. If you are a general W-2 employee, so you work for a company and you get a paycheck every week, every 2 weeks, whatever it may be, they are taking taxes out of your paycheck automatically. This money is going to your tax liability throughout the year. At the end of the year, you file what is called a tax return. And at this time, you're going to add any credits that you qualify for, any deductions, and that's going to tell you what your adjusted tax liability is. So you have paid X number of dollars throughout the year through your W-2s, but your final taxes due is a different number. If you paid more in your W-2s, you get a refund. If you didn't pay enough in your W-2s to cover that, then you owe the IRS money. Your tax liability is that number. It is not the refund. It is not what you owe. Tax liability is very different. And to make this even clearer, let's head on over to the 1040s that were provided to me from John and Jim Doe. Again, a gracious shout out to John and Jim for sharing their personal information like this for your benefit. On this first one, what we have is John and Jane Doe. They have 2 dependent children, Jim and Jenny. They made $199,511 combined through their W-2s. This was throughout 2022, and they are filing a married joint return. They also had capital gains and other minor income of $489. So their total income for 2022 was exactly $200,000. They had some student loan interest, HSA adjustments, total of $3,580, bringing their total adjusted gross income of $196,420. This would be the number that they would use to determine, are we qualified for these tax credits? Now, John and Jane did take the standard deduction of $25,900. They also had $1,100 in business income deductions, bringing their total deductions to $27,000. So now their total taxable income is $169,420. So $28,506, that's line 16. That is your tax liability before you start adding in credits. So they have two kids. There's two child credits available. That's $4,000. They also had child dependent care expenses of $1,717. Their total amount here, $5,717. So that brings their total tax liability after credits to $22,789. This is line 24. This is the line that they're going to use to determine what their tax liability was for 2022 to see if there's enough room to even add $7,500. Throughout the year, their W-2 taxes taken out were $29,758. So if you take that against their total tax liability of $22,789, they're actually going to get a refund of $6,969. They overpaid by $69.69, and that was due to their W-2s and their deductions and credits actually took off more than they ended up paying through their W-2s. That $69.69 is not how much tax liability they have. Their tax liability was $22,000. In this situation, had they bought a vehicle that qualified for $7,500 in tax credits, John and Jane Doe would have received $14,469 in a refund. It is a refund because they overpaid. That is not a refundable credit. You still get this money back if it does not go beyond eliminating your total tax liability. Again, tax refund, tax liability, very different things. Jim and Jenny pulled in $99,511. They had $489 in capital gains and other income, bringing them to a grand total of $100,000 even in income for 2022. They also had student loan interest and HSA adjustments, giving them $3,580 in deductions, bringing their adjusted gross income to $96,420. They too took the standard deduction, $25,900. They had business income deductions of $1,100, so $27,000, bringing their total taxable income to $69,420. Now, following the same tax formula, line 16, which is their total tax liability before credits, was $7,919. They also have two children, so there's $4,000 in credits, child dependent care of $1,717, giving them a total of $5,717 in credits. So take that $5,717 from $7,917, that gives you $2,202. That is their line 24 number. That is their tax liability. Throughout the year, Jim and Jenny's W-2 taxes taken out were $9,171. If we take that against the $2,202 that they actually owed, they overpaid by $6,969. So they're receiving a refund of $69.69. Now assume that they want to buy an electric vehicle that qualifies for $7,500. Unfortunately for them, they only have $2,202 in tax liability. So it's very likely that they would only receive $2,202 in 2023 or 2024 based on what their previous income was. Their refund would increase from $69.69 to $9,171. So as you can see, there's two very different situations, and one family, again, married filing joint, is making $100,000 a year. One family is making $200,000 a year. You can see very clearly a basic rundown of how this is going to look for each of these situations. Again, tax liability is not your tax refund. Cannot say that enough. Go to your 2022 taxes. Look on line 24. That is the number of your remaining tax liability after credits that you've already received that you would have had in 2022. That's going to give you a good idea, generally in a ballpark area, of what you should expect for 2023 and for future years. Now, as your income increases, as your tax situation changes, that will obviously move, but that'll at least give you an idea what was your tax liability last year, and you can kind of figure out how much different this year is from the previous. So very likely the most riveting video you've seen in quite some time. I really appreciate that. You likely have a better situation in tax liability than you realize. And some of you may not even have any clue what your tax liability is. And hopefully now you have a better understanding of what you should be looking at going into purchasing an electric vehicle that qualifies for tax credits. So I really hope that you enjoyed this video. If you did, of course, give it the thumbs up. If you haven't already, of course, subscribe to the channel as we continue to post content regularly. You can follow us on Twitter and Instagram @BeardedTesla. Thanks so much for joining us, and we'll catch you next time.